Hello, my name is Jeff Kantorowski, and I'll be walking you through IRS 1095-C reporting examples for 2020 using the most common questions we've received in past years. Please note that these reporting examples are specific to applicable large employers, or ALEs, with over 50 full-time equivalent employees. Our required disclosure that this webinar is not intended to provide legal or tax advice. For today's Form 1095-C examples, we are using the most frequently utilized safe harbor, which is the federal poverty line. The other assumptions include the employer offers coverage through school care and therefore is considered self-funded. The school care plan year begins July, and all employees are offered family coverage and enroll when offered, unless otherwise stated in the examples. Self-funded ALEs may use Form 1094 and 1095-B instead for non-employees covered under the plan, such as early retirees, COBRA participants, or widowed spouses. However, for consistency, you may want to use 1095-C for all. An ALE that offers health coverage through an employer-sponsored self-insured health plan must complete Form 1095-C Parts 1, 2, and 3 for any employee who enrolls in health coverage, whether the employee is a full-time employee for any month of the calendar year. Now let's talk more specifically about Form 1095-C. On Form 1095-C, we'll begin with Part 1. Here is where you enter basic contact information for the employee and the applicable large employer. For Part 2, here is a listing of codes to be used on line 14. The most common codes are 1A, 1E, and 1H. We will provide more details on each code as we move through some specific examples. For Part 2, line 16, these are the safe harbor codes. The most common codes here are 2A through 2D and 2G. With this foundation information, we are ready for the first example. John is a full-time health insurance eligible employee enrolled in the school care green plan all calendar year. He, his spouse Julie, and child Jonathan have family coverage. His employer offers the school care red and green plans. The lowest cost plan is the red plan at $778 per month for single coverage. The employee cost share is 10% or $77.80 per month. The red plan cost increases on July 1st to $817 per month, and the employee cost remains 10%. The $77.80 per month and the $81.70 per month satisfy the federal poverty line standard of $103.99 per month. Looking specifically at Form 1095-C, let's review Part 1. Part 1 contains John's information as the employee on lines 1 through 6. This includes his name and address. Lines 7 through 13 are more specific to the applicable large employer. On these lines, you'll want to enter the ALE's name, employer ID number, and contact number. For Part 2, the first piece of information to enter is the planned start month. This is not when the employee begins their coverage. All school care plans begin in July, so 07 is noted. For anyone who enrolls in coverage at any time during the year, you'll still use 07. Moving down to line 14, code 1A is used as a qualifying offer due to coverage satisfying the 2020 federal poverty line standard. Line 15 is left blank, which we'll explain in a moment. Line 16 is code 2C, as John enrolled in coverage all 12 months. Now let's talk specifically about line 15. In future examples, line 15 may contain the employee's cost share for the lowest cost plan offered. When using code 1A on line 14, however, line 15 is left blank due to federal poverty line standard being met. A qualifying offer is, by definition, treated as an offer that falls within an affordability safe harbor. An applicable large employer is not required to use the qualifying offer method even if it is eligible, and instead may enter on line 14 the applicable offer code and then enter on line 15 the employee required contribution. Moving down to Form 1095-C, Part 3, the box indicating the employer-provided self-insured coverage should always be checked at the very top. In line A, John and his family are listed. In column B, all Social Security numbers are provided. Column C should be left blank. It is only used if the Social Security number in column B is not provided. Finally, coverage was ongoing all 12 months for all members of John's family, thus column D boxes are checked. For example 2, we'll look at a new hire. Michael is a new full-time employee on August 24, 2020, and he's eligible for coverage on the first of the month following his date of hire. He's offered and enrolls in coverage as of September 1st, 2020 in the School Care Green Plan and remains enrolled in that plan through December 31st. He takes single coverage only. The employer offers the green and red plans. The lowest cost plan is the red plan at $847 per month for single coverage. The employee cost share is 15% or $127.05. Regarding the safe harbor, this employee cost share does not satisfy the federal poverty line standard for 2020 of $103.99 per month. As we move to completion of the 1095-C forms, I won't be reviewing the information in Part 1 as it's straightforward with the subscriber or employee information and employer information. Instead, we'll move right on to Part 2. Always begin with ensuring the plan start month is 07 is entered as indicated previously. Next, move to line 14 for the offer of coverage. For the months of January through August, we'll use code 1H because there was no offer of coverage, but beginning in September through the end of the calendar year, we'll use code 1E. 1E indicated that Michael was offered minimum value coverage along with his spouse and dependents. On line 15, we don't complete anything for the months in which he was not covered or offered insurance. However, beginning with the month of September, we must list the lowest cost employee share of health insurance for the months that Michael was enrolled, and as stated on the previous slide, that's $127.05. For line 16, we have several codes that we need to use. For months of January through July, Michael was not employed, so we're going to use code 2A indicating not employed any day that month. In August, however, Michael was employed, but he was not offered coverage, so we would use code 2D indicating the employee is in a non-assessment period or waiting period. Beginning in September through December, while he had coverage, we would use code 2C for enrolled in coverage. And lastly, part 3, here's where we would list the covered individuals. We must first start at the top of the section to the far right and be sure to put an X in the box to indicate that the employer provided self-insured coverage. Then Michael's name is listed under column A and his Social Security number under column B. As indicated before, do not fill in the date of birth if you've provided the Social Security number. In this example, we are not able to use column D because he was not covered for all months. So instead, we move to column E and put an X in the boxes for the months of September through December to indicate that those were the months that he had coverage at least one day. For example 3, we have Martin, who retired in 2013 and remains enrolled in the employer's group-sponsored health coverage as an early retiree. Martin is enrolled January 1, 2020 through December 31, 2020 in the School Care Red Plan. He has single coverage. Since he is a retiree and not employed any time during the year, the lowest cost individual plan and safe harbor are not applicable. We'll go right to completion of 1095C Part 2 and mark 07 in the start month. Martin's form is quite simple to complete. On line 14, we're going to use code 1G, indicating that he is a part-time employee or a non-employee covered under the self-funded plan. We do not need to fill out any information for lines 15 or 16 as they relate to the lowest cost plan and safe harbor codes, which are not applicable in this example. And in part 3, be sure to check the box at the top to indicate the employer provided self-insured coverage. Then indicate Martin's name under column A, his Social Security number under column B, and check under column D that he had coverage for all 12 months. So what about this non-employee coverage and the use of code 1G? Code 1G can be used when you have an individual enrolled in coverage under the plan for 1 month or more calendar months of the year, but was not an employee for any calendar month of the year. If 1095C is used with respect to this individual, then you can put code 1G on line 14 and check off all 12 months. Or you may use separate monthly boxes for all 12 calendar months. Example 4 is an existing employee with a COBRA event on June 30, 2020. Nancy is a full-time health insurance eligible employee since 2010. She voluntarily terminated at June 30th and accepts COBRA for family through December 2020. Her coverage again is family. The employer offers the School Care Yellow, Yellow Choice Fund, and Orange plans. The lowest cost plan is the Orange plan at $774 per month for single coverage. The employee cost is 15% or $116.10 per month. The cost increases at July 1st to $844 per month, plus 2% COBRA administrative fees for a total of $860.88 per month. The $116.10 per month does not satisfy the federal poverty line standard of $103.99 per month. Moving on to part 2, again, code 7 is entered for the planned start month. On line 14, code 1E is used as a minimum value coverage was offered to Nancy and her family January through June. As a former employee employed during the calendar year, code 1H should be used for July through December. In line 15, the employee cost share for the lowest cost plan available is noted for the months Nancy was employed. It is not necessary to enter this for July through December, as Nancy was not an employee at that time. Line 16 uses code 2C, January through June, as Nancy was an employee who enrolled in coverage. July through June, code 2A is used as she was not employed. Part 3 covered individuals. Again, the employer provided self-insured coverage box is checked. Column A contains Nancy and her family's information. Column B has all of their Social Security numbers noted. Column C is skipped, and column D is checked because each family member had coverage for all 12 months. This last example may have been a bit confusing, so here's a look at IRS guidelines around former employees. For former employees on COBRA, IRS guidelines state an offer of COBRA continuation coverage that is made to a former employee due to termination of employment should not be reported as an offer of coverage on line 14. In this situation, Code 1H must be entered on line 14 for any month for which the offer of COBRA continuation coverage applies, and Code 2A must be entered on line 16 without regard to whether the employee or spouse or dependents enrolled in the COBRA coverage. So what about COBRA for someone who remains employed? If a COBRA participant remains employed, an offer of COBRA continuation coverage should be reported on line 14 as an offer of coverage, but only for any individual who receives an offer of COBRA continuation coverage. Generally, an offer of COBRA continuation coverage is required to be made only to individuals who were enrolled in coverage and would lose eligibility for coverage due to a COBRA qualifying event. But an applicable large employer may choose to extend a similar offer of coverage to a spouse or dependent, even if the offer is not required by COBRA. Example 5 is a little more complicated, but certainly representative of a situation that you may have to report on. We have an employee who retires during the year and then turns age 65. Cheryl is a full-time health insurance eligible employee. She retires on June 30th and continues her coverage as a retiree. However, on October 1st, she becomes eligible and enrolls in Medicare and the School Care 65 Plus plan. However, Candace, her spouse, is not eligible for Medicare and remains on the employer's plan as the subscriber beginning October 1st, 2020. So we have enrollment January through September in the School Care Green Plan for both Cheryl and Candace, but beginning in October through December, the spouse Candace is the only individual covered. Regarding the lowest cost individual plan, we need to calculate this for the months that Cheryl is employed. The employer offers the School Care Red and Green plans. The lowest cost plan is the Red plan at $819.50 a month for single coverage. The employee cost share is 20%, or $163.90 per month. This amount does not satisfy the federal poverty line of $103.99 per month that the employer is using. For Cheryl's 1095-C form, Part 2, we indicate 07 for the plan start month. On line 14 for months January through June, we use code 1E, indicating that minimum value coverage is offered to Cheryl and her spouse and dependents. Beginning in July, we use 1H, indicating there is no offer of coverage. On line 15 for the months of January through June, we enter the safe harbor dollar amount of $163.90, calculated on the previous slide. On line 16 for the months of January through June, we indicate to C that she is enrolled in coverage, but beginning in July, when she retires, we use code 2A, indicating that although she had coverage, she was not employed any day during those months. And in Part 3, we must remember to check the box for employer-provided self-insured coverage. Then we list the covered individuals along with their Social Security numbers in columns A and B. Now for Cheryl, she was enrolled and provided coverage at least one day in the months of January through September, so those are checked off in column E. But for Candace, her spouse, who remained on the plan the entire year, we can use the checkbox under column D, indicating covered all 12 months. Our final example is an ongoing variable hour employee, Dudley. His employer has adopted the following ACA compliance schedule. 1. A standard measurement period May 1st through April 30th. 2. A standard administrative period May 1st through June 30th. And 3. A standard stability period July 1st through June 30th. On July 1st, 2020, Dudley enrolled in the School Care Yellow Plan. Within the standard measurement period, it was determined that Dudley performed an average of 32 hours of service per week. Consequently, he was offered and accepted an opportunity for plan participation for the standard stability period. His coverage is single, and the employer offers the School Care Yellow Plan. The yellow plan is $766.50 per month for single coverage. The employee cost share is 100%. Clearly, the $766.50 per month does not satisfy the federal poverty line safe harbor. For Part 2, we enter 07 at the plan start month. Line 14 contains code 1H through June, as no offer of coverage was made to Dudley. Dudley and his family were offered coverage July through December, thus code 1E is entered. Line 15 has information for the month's coverage was offered. In line 16, code 2D is used through June, as Dudley was in a non-assessment or measurement period. Code 2C is then used for July through December, the months he enrolled in coverage. Moving down to Part 3, we check the box again for employer-provided self-insured coverage. Dudley's information is listed, including his Social Security number in columns A and B. The months of July through December are checked in column E, as those are the months when Dudley had coverage. We have a few updated resources as you begin to prepare documents, so don't hesitate to utilize these links to find important information such as the IRS 2020 Transition Relief Notice, forms, and other instructions. This concludes our presentation for 2020 IRS 1095-C reporting examples. Please do not hesitate to call School Care at 603-836-5031 with any follow-up questions. Lisa, Melissa, and Jessica are here to assist weekdays between the hours of 8:30 a.m. to 4:30 p.m. We appreciate your participation in the School Care Health Benefit Plans. Thank you.